All right. We're going to look at information technology in banking. This is the introductory chapter. So we're just going to be introducing information technology in banking. So firstly, what is information technology? IT or information technology refers to the development, maintenance, and use of computer software, system, and networks. So, IT, it refers to the use of what? Of computer software, systems, and networks. All right. So, we are using these computer software, systems, and networks for the processing and distribution of data. And data refers to information, statistics, and facts which are gathered together for storage, analysis, and reference. And then we move on to look at the challenges faced by banks in modern times. All right, firstly, we're going to look at macroeconomic risk. So macroeconomic risk, basically, we are talking about the risks and the challenges that face the economies of the world. And these challenges now, in turn, they lead to slower growth rates in emerging economies. So these macroeconomic risks, they now lead to low interest rates, and then these low interest rates are now then a risk to banks and their services. And then I will move on to regulation. The regulations from the government have increased and increased with times, and they've become more and more stringent. Therefore, banks, they now have to invest more time, more effort, and money into meeting and complying with these standards. The other challenge faced by banks in modern times is political interference. Alright, so political interference, we are referring to the interference made by governments in banking operations. So governments may intervene, maybe they want to raise their revenue, maybe it's in a time of budget distress and they want to increase their revenue, or maybe they want to rebuild the national tax base, so they might intervene by increasing the taxes paid by banks. And also they might intervene maybe to increase investor protection. And then we move on to technology risk. Alright, so technology is changing rapidly with time. So the banks, they have to invest appropriately in secure systems so as to compound the risk of cyber attacks. Okay, so the banks have to continuously invest in technology, continuously invest in secure and agile systems. And then we move on to criminality. Because of technology, banks now face more criminality because of IT. They are now hackers, okay, and they are now cyber crimes. So the banks have to invest more and more in IT. And then we're going to look at the general requirements for a bank. So basically these are the requirements to run a bank. What are the necessary requirements? What is needed before a bank can start operating? What is needed for a bank to operate? So firstly, we're going to look at licensing and supervision. Alright, so for licensing, there are certain requirements that have to be met before one is given a license. And when one is given a license, they now have the right to own and to operate a bank. So basically, licensing provides the license holder the right to own and operate a bank. And then we move on to supervision. So supervision basically is an extension to the license granting process. What it means is that after you've been given a license and then you're now running your bank, then now comes the step of supervision, and this is done maybe by the government or maybe the central bank or any other independent governmental agency. Okay, so basically they'll be supervising the bank's activities. We move on to capital requirements. Alright, so under capital requirement, there's a framework on how banks must handle their capital in relation to their assets. Alright, so there are capital requirements, there are amounts of capital that a bank is supposed to keep. And then we move on to reserve requirement. These are the amounts, the minimum amount that is supposed to be kept in reserves by each bank. So we move on to corporate governance. So in countries, from country to country, there are different corporate governance acts. And then these corporate governance acts are supposed to be followed. And their main intention is to encourage the bank to be managed and run well. And then we move on to financial reporting and disclosure requirements. Okay, so for all companies, that is public limited companies who trade on stock exchanges, they are required by the law to publish their financials, and they are also supposed to disclose their information. So this is the same for banks. They are required to report their financial statements, and also they have disclosure requirements which they have to meet, especially if they're trading on the public market. Alright, we move on to credit rating. So every bank is supposed to obtain a credit rating from an approved credit rating agency. Okay, so you obtain, as a bank, you obtain your credit rating and you maintain that credit rating. And then when you obtain this credit rating, you're supposed to disclose it to your investors, and also you're supposed to disclose it to prospective investors. Okay, remember, this credit rating has to be from an approved credit rating agency. And then we move on to large exposures restrictions. So banks may be restricted from having large exposures to individual counterparties or groups of counterparties. Such limitations may be expressed as a proportion of the bank's assets or equity, and different limits may apply based on the security held and or the credit rating of the counterparty. Okay, so there are restrictions to the exposures faced by banks. Okay, and these restrictions may differ according to the security held and also to the credit rating of the counterparty. And then we finish off this learning outcome by an assignment. Okay, this is an assignment that I want you to go and look at. It is out of 25. So the assignment question reads, what is the use of user requirements documents?